Hello guys, Tina here. In this video, I want us to do a very short chart breakdown on XAUUSD and what XAUUSD has been doing for a while now. Honestly, I've not traded XAUUSD in a very long time, because at some point for over a year, I focused on one pair, GBP Although I started with XAUUSD, but somehow I kept it one side and moved on to a new pair. I started with XAUUSD and GBPUSD, and I decided to try out GBPJPY. It was wonderful for me, and I decided to stick to just it. But sometime around this year again, I felt like, okay, since I'm more of a swing trader, there's nothing wrong with adding back XAUUSD and GBPUSD. Okay, so anyway, I want us to talk about this, this particular trade you're seeing here. Okay, this trade actually has taken almost a month to get to target. This trade, I was able to mark this trade on the 7th of July, and it only got to take profit yesterday, being the 5th of August. That's like roughly a month, 2 days to a month. Okay, and the reason is what you can see in between. There was a whole lot that happened in between here before price decided to get to this very target, and I'm expecting more moves to the upside. Okay, now let me give you a little backstory on how I was able to get this set up, the confusion that came with it, the different emotions and sentiments that came with it, and my ability to still stand on this particular bias. Let's go to the daily time frame so that you will see something. Okay, so earlier this year, gold started selling, and it was surprising because gold is a pair that everyone knows to be a buying pair. You can actually confirm that from here. As you're seeing, you can see the previous price movements from gold. It keeps buying. Okay, it just moves on a straight line. In fact, that's literally the movement of gold for a very long time. And I remember this region was around June, July last year. We had a little daily consolidation, all right, and after price took off, after that little consolidation, it wasn't little because it happened for months, around May, June, July. Okay, then I think around August, gold took off again and started buying again. So sometime this year, gold started selling to the surprise of many, because this is a buying pair. Why is it selling? So you think this particular demand is going to hold it? Oh no, it won't hold it. It will go and it will keep dropping. Okay, it just keeps dropping anyway. It just keeps dropping. And I think a lot of people got carried away by that drop. A lot of people got carried away by the fact that, oh, gold has been dropping, so it's just going to keep dropping. Even when the technical aspect of it is showing that, oh, there is going to be, at least a possible reversal again. Because by the end of the day, no matter how much it has dropped, you can still say that gold is generally still in an uptrend, honestly. But I think we all see the market differently. And when I saw this, when price approached this particular demand, I felt like it was a valid and strong demand that should hold price. Okay, and price gave this, engineered liquidity around here, came, swept it, or should I say inducement or whatever it is. Price gave it here, so I knew that it was going to, a lot of people start buying. So of course, you can see there were buying opportunities, but price also dropped further. Okay, and came into the POI that it's supposed to react from. Okay, when it came to the POI that it was supposed to react from, I literally thought that it has reached, but it had not. I made a mistake at some point, because when it came to this demand, I knew that this is a demand that is supposed to hold price. And as a form of confirmation for my entries, I always like to wait for a 4-hour breakout. Okay, so the initial time price dropped to this level, I thought it was a 4-hour breakout, and I decided to take on that trade. But thank God I didn't really execute that trade. That trade literally hit a sell, and I needed to wait for price to react again. Okay, and price actually came back and then mitigated the actual order block. Another block, candle sweeping liquidity off other candle. So I had to measure it and then got my this. I measured this from the weekly time frame actually, because this is a daily stroke weekly demand zone. So I had to mark half of my order block from the weekly time frame, and I saw that price was already reacting strongly to the 50% of the weekly time frame order block. Going back to the daily time frame, I saw that it was also within the same zone, obviously respecting the weekly. Okay, all I needed to do was to wait for a 4-hour breakout. All right, and going over to the 4-hour time frame, just to help you see everything clearly. Going over to the 4-hour time frame, I needed to see a breakout. Now you can see where price reacted into the into this particular demand zone. I actually made a mistake within this zone. I want to believe that you can see it very well. I made a mistake thinking we already had a breakout because there was a little high here and then price went and overtook that high. So I saw it as, oh, maybe there's a breakout now. Why? Because price was really reacting from the demand. But I didn't know that price had not tapped in properly to the order block. So of course price came and swept this particular level. I had to be patient, and price now went ahead to take out that particular high that it created around here, and that was how I knew that, okay, for us to have this 4-hour breakout, then we should begin to look for, and apart from the breakout, we have a valid order block around this zone. So that was how I was able to mark this particular setup, and I stood solidly behind this particular bias. All right, even when people had different bias, everybody was expecting that it should come back and sweep this level. I kept holding on to it. So notice that this particular POI does not have any inducement. So price engineered liquidity close to it. Price engineered liquidity close to this POI. Okay. And I didn't pay attention. I knew that it didn't have any inducement, but my entry was around here already. Okay. And I noticed that the SL was too much. Even when you use, like, it was more than what I want to always risk on a trade, because I have a defined risk for every trade. So I got in quite early and I didn't put my SL at this particular invalidation because it was, too much. The SL was way too large. Okay, so price came right inside after it created the engineered liquidity. Of course, when there is no inducement, price creates an engineered liquidity, and when there is no engineered liquidity, then price uses the POI as what? Liquidity. But in this case, price produced an engineered liquidity, and then it swept the engineered liquidity dipping deeper into this into this particular POI, thereby taking me out on that trade because I got in from this level. All right, and then my SL didn't cover here, because if it had covered, then I'll be risking more than I'm supposed to risk on a trade. So when price moved the first time, and like from here to here, giving me $100, it started coming back, and I had to break even because in my mind, why is he coming back? Okay, and I didn't know that that was an engineered liquidity. I was literally buying from the inducement that price already created. Okay, so price came, swept it. Of course, if my SL was at the invalidation zone, of course, I would not have anything to worry about. I needed to break even because I knew that my SL was not at the invalidation zone. And if I had not broken even, I would have gone out on a loss. But thank goodness I broke even. So I didn't go out on a loss. And I didn't also get the opportunity to get into this level either. Why? Because you can see the whole choppiness around this area that happened, plus the sentiments that, oh, gold will keep selling and all of that. So, these things, your conviction may not change. I read that from the Reminiscences of a Stock Operator by Edwin Levefe. I don't know if you've read that book. If you've read it, it says something like, as a trader, you may not be, drawn out of your conviction about your bias or whatever, but your confidence can actually be messed with. Okay, so even though I maintained my buy bias, I was no longer so confident, because if I was, I would have, of course, made sure that my SL is covering the invalidation zone, okay, and all of that, even if it makes me risk more. But it's not advisable to risk more than you have already defined. So that was one thing I was disciplined enough not to do. But at least I should have still been able to find a way and get back into the trade. But the way the price was moving itself, it wasn't also giving me the confidence that I needed. It wasn't helping my confidence either. Okay? Because imagine price reacted to this zone, came back, went this way, and still found its way coming back. And I'm like, what's wrong with gold? Okay? So first of all, when it created this move, I had to find the second entry around here, okay, making this as my inducement, all right, and price came, reacted from it the first time, and still went ahead and retested the original entry, thereby reacting to the new order block that was created here. So of course, I had about, that's the second entry that I had right after this particular main entry. Now this is where the main entry was. I want you to see very well. Okay, and the second entry I got it around here, so I still placed a new order around here, but price came, the new order was around here. I was using a breaker block entry, even though I don't trade breaker blocks. All right, but because of a continuation, I didn't want to miss out on the move completely. I used the breaker block entry for this particular trade. Okay, and of course my SL was here. I used the first entry as my SL, and then my target, I was still targeting the same level around here. Okay, I was still targeting the same level around here. So as you can see here, price came, reacted, and respected that breaker. But as you all know, most times breakers, you need to just not target much when you are trying to use breakers. Right, so price came back and reacted to the other block. Under normal circumstances, price would not do that, because I mean gold does not always pull back much to other blocks, and since it has already reacted to the main order block, I felt like, oh, the continuation should just be from a breaker block and then it will take off. But no, it came back and reacted to the main order block that was left behind when this first move happened. All right. And when it did that, it found its way to retest the initial entry. So I wish at this point that I even still placed my order on the initial entry, but you would never think of these things, honestly, until the whole thing is gone. All right. So when this particular one happened, I needed to find a new entry, okay, to follow up with the move, because at this point I knew that, oh, price might just still buy. What happened, because when price retested this level, price came and so bought to this very point. Looking at the 1 hour time frame, I knew that, oh, something can still come out of it, since price already created a new level. That was it. I saw this particular setup here. I saw what looks like my edge here on the 1 hour time frame. I don't always trade the 1 hour time frame, but at this point I saw what looked like it, and I decided to take advantage of it, since I already have a solid setup on a buy, and I felt like price would definitely respect it. As usual, gold will not always have an inducement. It decided to create an engineered liquidity. So the truth is that I saw this setup, but I decided not to use the normal entry I would use. I kind of refined my entry on the 15 minutes time frame, because I didn't want myself to be big like it was on the first one. Alright, so I placed my entry around here. Price came, gave us an engineered liquidity, which should have given me a signal that price will not pull back much once it sweeps this engineered liquidity, and that was what happened. Price came, didn't pull back much. Price came, it didn't pull back much again, and it took off. My SL was around here, my entry was around here, and I think I'll try and put up this particular setup on the video later. So price ended up not coming to my POI. Why? Because I refined it. Now this taught me that for pairs like gold that always uses engineered liquidity, you should just pay attention to whether it has an inducement originally. If it does not have an inducement, look out for an engineered liquidity, and once it creates that engineered liquidity, your entry can actually be on the tip of that engineered liquidity if you want to catch on that trade. For the 3 trades that I have here, I noticed that they all use the engineered liquidity concept to take off. All right, so price did not tag me. That was how this happened to be a good bias inside my main setup, but still did not tag me along, and boom, that was it. So what happened here? Price respected the original level. Now you can see that each of the bias or each of the setup that I had on this particular movement, they were all right, marvelously right, but I didn't benefit anything from this move that happened for almost 1 month. All right, so this is the original bias, and inside the original bias, I was able to find several setups inside this original bias, and price eventually got to this level. Now, when somebody found out that I was targeting this very level, it felt like, why are you targeting that much? You're always targeting so much. And I said, once there's going to be a proper buy, then I know that price will definitely not just the external, because this should have been the external range liquidity for this trade, but I still extended it to this level, and I still know that it will still get to this level. But because I'm someone that respects roadblock, I feel like, oh, let me just respect and instead find more re-entries along the road. Why I always like to target something reasonable is because sometimes when price begins to move, if it eventually takes off, it doesn't always give much opportunities anymore. You understand? So if you understand swinging, you will definitely want to stay back on your position so you maximize that move well. All right, so that is it. Price range, you see what it ranged in between here. But within this range, it also created lots of opportunities for those that are intraday traders, created lots of sales opportunities for them, and also created lots of buy opportunities. I wasn't looking out for the sales, but even on the buy alone, I was able to find 3 entries for this particular move here, and boom, it got to take profit just yesterday. I mean, that was how I got this trade. So, just a recap of everything that I've said. I was able to see this setup on the weekly time frame. I saw the price was really reacting to the weekly time frame demand, stroke the daily time frame demand as well. Okay, and then I waited for a 4 hour breakout, and after the 4 hour breakout, I got my entry. Okay, funny enough, I wasn't able to maximize this move. If I was able to maximize my 3 entries on this move, then I would have made a lot of crazy shit of money. Okay, but of course, it just happened, and it is what it is. All right, so that was it for this particular trade. I know people that were on the monthly time frame hoping that, oh, price should come, because someone said something like price will come and fill this imbalance before moving. And I'm like, yes, I know that the monthly time frame is stopping the weekly and daily time frame, but the weekly and daily time frame demand is such a strong level that price should also respect. Because for price to come down here, when you look at it from the daily time frame, you see that the move is not like there's nothing there. Imagine price coming below this very demand. What is here for price to now react to? This is the best level that price can possibly react to, and it will make sense. All right, because is there any other block around here? Is there any FVG around here apart from that one that is on the monthly time frame? So the one on the monthly time frame is not reflecting on other time frame, because that's what makes it a valid POI. If you can see something on the higher time frame and you can actually see it on the lower time frame, like you see the lower time frame respecting the same thing that you saw, that's where it makes sense. All right, so that was it, and I was able to catch this amazing move here. In my opinion, we should look out for more buys. I remember the last video I did, I talked about that was even when I was currently like on the setup. The setup has not been validated yet, but now this is everything about the setup. You can see that I was very right on these very buyers, and just a few people had the same buyers with me. A few people that know what they are doing, they're the ones that had these buyers with me. Every other person know what they are doing anyway, but I'm just trying to say. Okay, so in this case, I'm expecting more buy ups. I can see people still saying, oh, that the buy is just like an inducement to bring to come and tap into this very supply. Of course, price does not move in the same direction, so I'm hoping my next level, I am hoping for price to you know I'm hoping for price to mitigate this daily imbalance, because price gave us an imbalance at this point. I'm waiting for price to mitigate it, and that way we'll find more entries when it comes to that daily FVG. Then we can find more entries on the lower time frame. All right, so in all of these things, BBJPY and BPUSD have not made any significant move. They've made a significant move in the aspect of sellout. Price just came and suddenly dropped heavily, and since then I've been waiting for a proper reaction to know whether we are continuing with the buys or the sell, but you can see that it has not had any reasonable reaction. So I'm very, very neutral on GBP for now. The same thing with GBP there's no significant move from it apart from the heavy buy up that happened the last time. Since then, it has not had any significant move to validate any area. I have levels I'm looking at below for it to at least come back to before we continue the buy, if the buys want to continue. All right, so that's it for this particular video. The major aim for this video is just to show you what I had on XAUUSD and show you how price respected the levels, and yeah, we're hoping for more levels to be respected, but then we are going to be paying attention to every roadblock. If price wants to continue selling, we'll need the confirmation for that, and if it's going to continue buying, of course, we also need the confirmation for that. All right, so that was it. And yes, one of the reasons for this chart breakdown is to actually show you that what we talk about theoretically can actually be replicated on the chart in real time. Okay, I do a lot of educational videos on this channel. I teach advanced trading strategies, teach beginner series, and I talk about trading in general. All right, and if I don't do things like this to show you that what I am putting out there is actually doable, it's actually it's something that can be replicated on the chart, then it will not make sense, and that is the reason for this. Okay, it also reminds me that I can do this. on my own. I can actually replicate what I am teaching. I can actually replicate it in real time. And you, that is the viewer, it also tells you that, oh, it's not just about the theories. There is also the practical aspect of it, where you can learn how these strategies are being applied in real time. All right, in real time, literally. So yeah, I want to believe that this video was useful to you. If it was, please like, share, and subscribe to the channel to get more educational videos, more motivational videos, more tips on trading, and a lot more values actually. Okay, so please like, share, comment, subscribe, and I'll see you on the next one. Bye.